All right. What's up, tycoons? What is up, traders? Going to give an update on TLT. We're going to take a look at the 10-year Treasury note as well, TNX, HYG, high yield corporate bonds. Really just kind of go over what the bond market is pricing in right now. And then we're also going to take a look at the S&P 500 and a few other metrics that I use to really gauge market sentiment and judge, where we are at the market currently and what the landscape is looking like. So make sure to smash the like button and subscribe to the channel if you guys are new, and we'll drive straight into it. So I've been tracking this larger 5-wave move to the downside, possibly taking TLT anywhere between 80 and 90 in this range to complete our 5-wave move to the downside in orange. But if we zoom in here, okay, and we take a look, the way that this works is your wave 1 down is a 5-wave impulsive move to the downside. Your wave 2 is an ABC up, and then your wave 3 is another 5-wave move to the downside with the wave 4, that's an ABC correction wave up, and your wave 5 down is going to be another 5-wave impulsive move down. Right now, the bond market is calling the Fed's bluff. So the bond market is essentially saying that the Fed is bluffing right now, and that they're not going to be as hawkish as they lead on. Okay, if we take a look at TNX, the 10-year Treasury yield, what we're seeing is we were either tracking an ABC up, okay, to see if if the Fed was going to stay hawkish and continue raising rates, we could have gotten this movement upwards. Right now, I also priced in, or charted up an ABC down if the Fed goes dovish, right? And right now, the Fed is still leaning a little more hawkish, but the bond market is essentially calling their bluff. So we're seeing yields go down, which will result in bond prices going up. So, it looks like we're getting this ABC down. It's playing out perfectly. We hit our A wave, we got a nice B wave bounce up, and we've come down and started our C wave. We need the 10-year to break 3.434 if we want to see TLT in the bond market continue to go up. We have a gap down on TNX that we possibly could fill to about 3.15 and then also 2.90. If the market continues to price in a dovish Fed and possibly earlier than expected pause in interest rate hikes, then we're going to see this continue to break down. Now, we do have a little bit of a double bottom here, so I wouldn't be surprised if we get a bounce on the TNX and we see a little bit of a drop in TLT. But it's just something to, just pay close attention to right now. Now is not really a good time to rush into anything. It's really good to let the landscape play out and not force any trades. So remember, when TNX is going down, when the rates are going down, then we're seeing the bonds go up, right? So one other thing that's really important has been our fib retracement levels. If we look for the entire scope of the year, we have rejected our 3 major retracement levels. So that's what I'm going to show you guys real quick and basically visualize why they're so important using the fib tool over here. You want to look at the 61.8, the 50%, and the 38.2. These are the 3 most important and most well-respected retracement levels. Nothing moves in a straight line up, nothing moves in a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. Once you break through those retracement levels, that's when you can get a possible reversal. We have yet to do that in TLT, right? So we came down, we retraced up to 38.2, continued lower. Same thing here. We come down, we retrace up near the 50%, continue lower. And that's been the pattern the whole year. So the trend is your friend until the trend is broken. We haven't broken the trend yet, right? So come down, retrace up to 38.2, continue heading lower. Same thing over here. We come down, we have this large move down, we retrace up to the 50%, and we continue heading lower, right? And we're respecting our ABC correction waves, and we're respecting our 5-wave impulsive moves to the downside for the trend continuation. So if we look right now, most recently, we got a clean rejection off of our 61.8 retracement level. And then shortly afterwards, we got the MACD sell signal. So the MACD sell signal has really been the telling tale. If you look here, in a sell signal, right, is going to be the red line crossing below the white line. Okay, and a buy signal is going to be the red line crossing above the white line. So if we see here, we got a buy signal on the MACD, then we had a very strong ABC push up. Okay, here we got the MACD sell signal, we had a strong push down, but we have this long-term trend line that we've been respecting as resistance. And what we've done is we've actually broken out, came down, tested it as support, and continued up higher. So I drew these ABC 1, 2, 3, 4, 5s down a long time ago, right? And it's been respecting it very well, but just because it's respected it for months and months doesn't mean that it has to respect it forever in the future. So it's a really tricky time right now. Are we starting our 1, 2, 3, 4, 5 down, and this wave 2 up was completely normal and justified? Who knows? Possibly. Right now, the bond market is seeming pretty bullish, and it's pricing in a dovish Fed, or at least more dovish than expected. We have the FOMC meeting coming February. That could change everything, right? He could come out super bearish again, super hawkish. We don't know for sure. But the big question we have to ask is, are we topping out on a wave 2? Now, we could come all the way back up to 109.72, or we even have a gap up here to about 111.4. We could bounce all the way that high. And we could, if we go bullish, and let's say this is our bottom over here, instead of being an ABC correction wave, what we would get would be a 5-wave impulsive move breaking out of our larger 5-wave move to the downside. So it would look something like this. Okay. It would be, A, B, C, D, E, and take us up here to fill that gap. And then we would get an ABC correction and then continue in another 5-wave move back to the upside. That's what could possibly happen. But right now things are unclear, right? Right now things are still following the pattern. We're still, in our wave 2 up. So I'm not rushing into longing. I'm not rushing into shorting anything right now. Just kind of taking my time and letting the landscape develop. That's very important to do. We got the MACD buy signal right here, and it's been bullish, right? We filled the gap right here to fill that we needed to fill. We have one gap up to fill, and we actually have 2 gaps down. Now, gaps fill 90% of the time. Historically, the big question is when. So we could fill this gap up here soon. We could take months or years to fill that gap. We could come down and fill these gaps soon, or it could take months and years to fill those. So it's good to have those on there just as an idea of where, the price is being drawn to, because naturally it's going to be drawn towards these gaps to fill those gaps. You just don't know which way it's going to be drawn to, if it's going to try to fill the gaps up first or fill the gaps down first. If we start to get a reversal and we come down here and fill this gap, this is going to make me feel more bearish, right? And it's going to look like we're getting that 1, 2, 3, 4, 5 down. Okay. But if we come up here and we start to fill this gap up here, we could be negating our overall bearish pattern that we've been tracking for the 1, 2, 3, 4, 5 down. All right. So, I'm taking my time, using some patience. If we look at HYG, okay, because we just took a look at TNX, TNX looks bearish. If we look at HYG, we're tracking 2 patterns, right? So we were looking at this falling wedge right here, which is a bullish pattern. You'd look for a breakout. And then we were also tracking the smaller rising wedge, and we got a breakdown of there. But look at what we did. So here on this falling wedge, we got to look above, and then we failed, right? So that was bearish. And, I gave you guys the major support level, the 61.8 retracement level. We needed to break below there to continue heading lower. What we did was we actually found support there, and we've pushed back up higher. So what we really did was we got to look below and fail. And now we're trading back in our range of this rising wedge right here. So that's pretty bullish, right? So we got to look below and fail, and we actually broke out again from this major trend line here. So it's going to be real interesting to see what can happen, right? We kind of have a little bit of a double top here, but if you look at HYG, right? We had the MACD sell signal over here. We got the sharp move to the downside, got the MACD buy signal right over here, and we had a sharp move to the upside. So it's going to be interesting, right? You want to see, is this MACD going to continue trending upwards, or are we going to get another sell signal and see it cross below that white line and possibly bring us back down? The next one we're going to look at is going to be the VIX. Okay, so the VIX has been very one directional all year. In the past year of 2022, if you take a look what's happened, and we just broke this pattern particularly. So what you see here is we move down, right? We trend down for about a good month or two, and then we get a break up. We pull back, and then we continue up higher, and we trade upwards for another month or two. And then here we trade downwards for a month or two. We break out, pull back, and continue upwards for another month or two. Then we break down, break up. You see, it's been very one directional, right? And we're continuing that pattern. It was really continuing this all throughout 2022, trading down for a month or two, breakout, pull back, and then continue upwards for another month or two. Over here, most recently, what we've seen is we were tracking to see, was it going to be doing the same thing, right? It traded one directional right here. We got a breakout, we got a pullback. And instead of continuing higher, the VIX has actually started reversing, right? And we just created a new low. If you look at that, we just made a new low on the VIX. The VIX is extremely bearish right now. So it's real interesting, when it comes to the bond market, right? The bond market is bullish. When it comes to the VIX, we're seeing that the VIX is actually bullish, not bearish. If we take a look at the S&P 500, the SPY, All right, the SPY is also very similar to TLT. We're tracking pretty much essentially the same pattern, right? We have the 5-wave move to the downside, but what what it's done is it's broken out of this range, right? So we were trading in a range. We had this range right here. I'll show you guys real quick. We really consolidated in this range for about a good week or two, with really no direction, right? We were holding our major support levels right here, and then we got the breakout, right? So we got, there's basically three phases to a reversal. There's the downtrend, then there's their box consolidation, and then you have the uptrend, right? So currently we're in the uptrend cycle, and we're going to see if this continue to break out higher and really get past this daily trend line that we've been having and respecting for pretty much the entire year. Just getting rejected multiple times. We had to look below, look above, and fail right there, and we came back down into range, and we most recently just got rejected along this trend line again. So again, very similar to TLT, what we're seeing is that it's looking like we could be getting our 5-wave move to the downside, and this is just a healthy 5-wave move, right? And we got our wave 1 down, then we got our wave 2 up, and we're topping out on a wave 2. And we could be starting the next phase down for a wave 3, and then 4, and then 5, possibly taking the S&P down to 330 to 350. But I'm not gonna go overly bullish here. I'm not gonna go overly bearish here, right? I'm gonna wait and see what's happening. Are we breaking out and trying to create a 1, 2, 3, 4, 5 wave higher? Or did we get our ABC up and now we're starting our 5-wave move to the downside? Again, we got the MACD buy signal on the S&P 500 right over here. It had a nice push up from 380 up to about 400. Over here, we got the MACD sell signal, right? And we had a sharp move to the downside shortly afterwards. So I'm using the MACD a lot to really give me a sense of direction and where things are headed. Direction is currently bullish. So the MACD is looking bullish. We could break out. We have an important trend line right here to break past. If we're able to break past this and flip it to support and continue higher, then we'll have to reevaluate. Okay, because just because something's worked for a long time, this 5-wave pattern has been tracking perfectly for most of the year. But we have to reconsider, right? And we have to reevaluate when things change. So if that's necessary, then I'll be doing that. One thing I also like to look at is SPY G versus SPY V. So this is the growth sector versus the value sector of the S&P 500. And what this basically measures is, are we more bullish or are we more bearish right now? Okay, value is typically defensive and then growth is typically offensive, right, on the offense. So if you look for the entire year of 2022, we're trading in this bearish channel right here, okay, meaning growth is underperforming value stocks and value stocks are outperforming growth. That's a typical sign of a bear market. Currently we're trading above the halfway point of this bearish channel. So that's the first step to getting, really a bullish breakout, okay? Is you want to be trading on the upper half of this, and then you want to make your way up and really get a breakout. So we have a lot of work to do to get a breakout here, but we are starting off on the right foot. Now we do have another bullish descending wedge here. We're at the bottom of this trend line here. We could get some type of move up to fill these gaps. So it's going to be interesting to see what happens there if we do get a breakout of first of this pattern, take us up to the top of our channel. And then if we get a breakout past the channel, things would look pretty bullish, right? And we possibly could be entering into a bull market. But SPY G versus SPY V is still very bearish, right? Versus the S&P and versus TLT, we're really seeing, if we zoom in some more, it hasn't had much outperformance, right? It's still trending down on SPY G versus SPY V. Another one to look at is XLU/XBI. What this is this is the utility sectors versus the biotech sector. And so we really want to see this start to underperform. Reason being is XBI is the bullish sector, okay? They're not even bullish, but it's the biotech sector, which is arguably the most risk on sector. So as the market is more risk on, typically you see things start to go up, right? They're taking on more risk. So whenever you see this pair rising, it means that the market is less bullish, right? So we see this is the beginning of 2022 right here. We're seeing utility sectors outperforming the biotech sector, meaning the market is much more defensive. It's much more risk off, right? And people are taking money out of riskier plays and putting them into very less risky plays. Well, look at what we've had. we did get a breakout here, right? And the market did drop a little bit, but look at what we've done. We're collapsing now, right? It's clearly in a short-term downtrend right here, and we're seeing big moves to the downside, meaning that the market is more risk on. What happens when we're more risk on? You're seeing plays like BBBY squeeze, right? Up 100% a day. You're seeing crypto stocks like BKKT up 100% in a day. There's been lots of squeezes going on, and it's not a coincidence that not only the VIX, which measures risk on, risk off, and it's kind of like the fear index. We're seeing that go down, but we're also seeing the XLU XBI pair go down. So really, we want to break this level right here of about 0.75, and then we also have an important level here right around 0.78. We want to break through those support levels and head back down. Okay, if we can start to head back down, this is going to mean that the market is more risk on, and transitioning possibly back into a bull market, or at least just transitioning back into a risk on market. Now, something else you can look at is skew, and we'll throw on the line chart real quick. And skew measures basically out of the money protection. Okay. And so what's really interesting right here is on a lot of the charts, whether it was TLT or SPY, we saw that it's possible we could be topping out at that wave 2, right? So we expected a wave 1 down, we expected a bounce, we got a wave 2 bounce up. And we saw that, we're really right where we should be to end our wave 2, but we're not sure if it's going to extend higher or if it's going to stop there and we're going to start getting a move down. Well, skew, as I said, measures out of the money put protection. This spike right here coincided with a big drop in the market the following Friday or the following Monday, right? This was Friday, November 25th. I remember this very specifically. And the market fell very much the next day, after the spike in the skew index. Over here, we had a spike on December 14th, December 15th, right? We saw the skew index go up a lot. And what happened? We had a pullback in the market. And whenever you see skew dropping dramatically, the market is getting more bullish, right? They're not really buying out of the money option contracts, buying out of the money protection. They're less aggressive with their hedging. Well, look at what we had. We had a very big spike most recently on the recent Friday close. We see the skew index shot up a lot. So it's going to be real interesting. Is that an indicator that we're possibly at the top of our wave 2 and that the market is about to pull back? So skew is something that I pay close attention to along with the VIX. And we're seeing a spike in skew, but we're seeing a drop in the VIX. So what does that really tell you? Well, it tells you that when it comes to adding, 30-day, because the VIX measures 30 days of option contracts, whether it's puts or calls, a lot of people aren't going heavy in buying, in the money protection or at the money protection, right? But when we look at skew, people are going pretty heavy on out of the money protection. So, if you have a bunch of money in stocks and everything's going up right now, a cheap way to hedge yourself is to buy out of the money put contracts. And out of the money put contracts on the S&P 500 or tech stocks or whatever you have right now as a cheap form of protection versus, the VIX is going to be tracking out of the money, in the money, at the money. It's going to be tracking a lot more of those. So we're seeing a little bit of a divergence here between skew and VIX, which means that, people are hedging themselves just in case we do see a drop with some out of the money protection. So hopefully you enjoyed this video. If you did, smash the like button, subscribe to the channel, and I'm out.